Welcome to the FX Options Weekly Outlook, a weekly podcast series hosted by Jason Ayres, a top instructor, trader, and founder of OptionSource.net. Join Jason as he discusses the latest trends in the Forex market with a look ahead on the US dollar versus the major currencies using the most commonly used technical indicators.
Hi there and welcome to the ISC FX Options Weekly Outlook for February 8th, 2010. As always, this is Jason Ayres of OptionSource.net. Let's take a look at a weekly chart of the US dollar index. This is a great way to gain some perspective as to how the US dollar has been trading against a basket of currencies. Well, as you can see here from our weekly chart, that the US dollar continues to trend higher. We have the 78 focal zone as an important support in the bigger picture. However, with the US dollar index trending into our 79.81 box here, we do anticipate some consolidation and perhaps even a pullback down to retest 78 before any continuation to the upside. If we take a look at a daily snapshot of the dollar index, we can see that we've drawn in the 79.5 as a near-term support level. We may see a little bit of a pullback down into that level after a test of the 80.5 to 81 focal zone. We would like to see a shallow pullback and then a break above 81 to signal a continuation to the upside. Let's take a look at how the US dollar has been trading against the Canadian dollar as seen here in the ISC FX options pair value CDD. Well, this 107-108 focal zone continues to be an important overhead resistance, and any rejection here is likely to slip back to retest support down at the 105.5-106 focal zone. We are looking for a break above 108 to signal any continuation to the upside for the US dollar, which is likely to have us targeting the 110-112 box. Well, the US dollar continues to slip against the yen as seen here in the YUK. We had identified the 88.5 focal zone as an important support level, and the pair value tapped into the upper range of this focal zone before bouncing on Friday to close somewhat higher from the lows of the week. Now, if this little retracement continues, the 90.91 box will be a key overhead resistance, and without a break above that, we will anticipate a continuation to the downside. That will have us targeting the 85.5-86 focal zone. Well, the US dollar continued to strengthen against the euro as seen here in the EUI. The pair value traded into our 73.74 focal zone, and at this point, after such an extended move higher, we would expect some consolidation and perhaps a retracement that might see the pair value come back in to test the 71.72 box once again for support. If the pair value does continue higher, we would suspect the momentum to the upside to slow down as it reaches into the 74.75 box. Let's take a look at the US dollar versus the pound. Well, we've been looking at the possibility of a declining wedge forming, which traditionally precedes a continuation to the upside. And last week we saw a little bit of a break above a little flag formation outside of the wedge that had us targeting the 63.5 box. The pair value closed the week above this focal zone on Friday, and at this point that 63.5 becomes an important support level. We would expect some consolidation after such a robust move over the last week, which might see a test back into the lower range of this area. Any continuation higher will have us targeting 65.5. Well, the US dollar continued to claw its way higher against the Australian dollar as seen here in the AUX. We were targeting 115 to the upside on a continuation of the move that has been underway since the beginning of the new year. And at this point, the 113-115 focal zone becomes an important support level. We may see some consolidation back down into this range, perhaps forming a flag. However, if any selling is contained above 113, we would expect the continuation that will have us targeting the 118 to 120 box. Let's take a look at a few of our key points. First of all, the US dollar index continued higher, testing the 80.81 focal zone. We would expect some consolidation over this coming week. However, the path of least resistance continues to be up. The CDD finished the week with another test of our 107-108 focal zone after a slight pullback. This focal zone remains a strong resistance. A break above 108 is likely to yield a test of 110. The YUK finished last week with a test of support. We may see a bounce up into the 90.91 focal zone. However, the path of least resistance for this pair value appears to be to the downside. The EUI continued to push higher last week, extending into our 73-74 box. Although some consolidation here is a high probability, the pair could easily make a push to test 75. The BPX pierced through the 63.5 range, which should now act as support for any pullback. An extended move higher should test 65.5. And finally, the AUX broke through 115 and pulled back slightly last Friday. We may see a retracement down into the lower range of our 113-115 focal zone. Support here opens the window for an extended move to the upside, targeting 118. And this has been your ISE FX Options Weekly Outlook for February 8th, 2010. As always, I'm Jason Ayres of OptionSource.net. Thanks for joining me here this week. We'll see you here next week.
Thank you for participating in this week's session. Please join us again next week. For trading ideas, exchange rates, webinars, news, and commentary, visit www.fxoptions.com. Become an OptionSource.net member. Visit www.optionsource.net. ISE FX options can be easily traded through all options-enabled brokerage accounts. These exchange-listed securities are cash-settled in U.S. dollars and have a European-style exercise.